Hey everyone, this is Andrew Austin. I have a lot of experience in Facebook ads, so I feel like my first video about company would be Facebook. Right now is Meta, and so yeah. To begin with, I wanna tell you guys that there's a lot of advertisers are pulling out of Facebook because of the iOS 14 update, and it really impacted the tracking and attribution of Facebook ads. And so currently, the way it works is Facebook basically does not really show you the real data of ads. Um, of like specific ads performance, specific campaigns performance. It uses statistical modeling, I believe, and so it basically estimates and just guesses, AI guesses the which ads actually brought the sale. And since a lot of advertisers use different channels, is a very big issue. The attribution basically is a very big issue because like people see ads on Facebook, they might necessarily click on them, and maybe they see the ad and they buy it on with retargeting, with Google Ads retargeting. So Google search, they search the brand on Google. So, and I feel like Facebook is, and there's a lot of like companies emerging trying to help with attribution, but they're like still very bad at actual attribution and tracking, because because there are just a lot of factors that go in there. Like for example, so user might click on the ad and then land on the website, then they do it, then they buy, and they at work, for example, they can go home and they buy it from different IP, different computer, different device, and they buy it not, and they don't use the Facebook. They don't go on Facebook and try to search the ad because they know the brand. Maybe they saved it, maybe, and so they go home and then they buy from Google Ads. So all of the other softwares, they wouldn't, the tracking softwares, they will be confused and they will attribute the sale to Google search, the branding ads, so the branded keywords campaigns. So that's a huge issue at stake for advertisers. And I believe like a lot of advertisers, they're pulling out of Facebook just because Facebook is actually working as a top of the funnel, but they don't see that. But I mean, they don't know how good it is or how bad it is, and if they're losing or making money. I mean, overall they know, but specific channel wise they don't know. So that's where they might know the ballpark how it works. And there's some and something that I've talked about to one of the guys that work on solving this attribution issue. So, and I mean, I'm going very into depth, but I think it's important to address this because I myself don't understand why Facebook or Google cannot solve it. Because for example, like Facebook has this interest basically. So so what is Apple's concern? So privacy, right? Apple doesn't want advertisers to basically Apple doesn't want people to feel like the advertisers really know a lot of information, right? That they and it's funny. I spoke with there's like this. I'm kind of digressing. But I'm not sure if you experienced that, but I experienced that myself, and I spoke to one of the Facebook employees, and they they didn't comment on that, and they said that they don't know, but so you talk with your friends about something, and you don't search it. you don't search it at all, or you just talk about it something, and then you see the ad in your feed, which is crazy because I mean obviously like humans have this pattern recognition, our brains like seeking patterns, you know. So and you attribute it, oh wow, this ad, they know, they listening to me actively. So as far as I know, Facebook has not confirmed that they do so, but Mark Zuckerberg, he has he taps over his camera and his microphone whenever he uses his computer, which is interesting because he, you know, he knows a lot about the he has a lot to hide, and so and he knows that, you know, even, but he uses Apple. It's crazy. He uses Apple Mac, and he still does it. And Apple is probably like unhackable. I mean, it is hackable. It's just not as hackable as Windows or Windows. Yeah, I don't know. Linux is probably who uses Linux these days? Developers. Yeah. So, anyways, Facebook implemented this interest thing. So it doesn't show advertisers that, hey, this specific users is interested in, it was a long time, interested in, for example, I don't know, electronics or glasses, sunglasses, or news. And advertisers don't know which specific users. So it's, but advertisers can target that specific interest. And so what really, well, what I cannot understand is why Facebook or Google cannot just give advertisers data in terms like attribution data, so advertisers would know, hey, this specific ad brought this specific number of sales. So advertisers can, you know, increase the budget, draw proper learnings, and so I mean they can do it without disclosing information about specific users that did the sale, right? And it would not impact the users that did the sale, because whoever's advertising they already have data of that user, of that customer, because in their website, I mean in their backend, they have like they can see, okay, all the information basically, and then also can ask. I mean, advertisers can implement the, wow, this has become an advertising video. Well, advertisers can implement like surveys, post-purchase surveys to survey customers where they seen where they how they, you know, learn from where they learn from about the company basically. So that's that. But anyways, let's just start with something very interesting here. So I'm not sure if I'm just gonna this is not what I needed to do. All right, so very interesting. So today Facebook's trading at historical low PE, and revenue. So looking at the revenue, where's the? Let's look at the revenue growth. So here's the revenue growth. So you can see revenue is growing by crazy amount, and free cash flow is growing by also average. It averages at 25% over the last 3 years. Over the last 5 years, it averages at 19% growth. So it's pretty crazy at the levels that Facebook's trading at right now. So looking at the price action here, we can see that we're not too far from pandemic lows. I mean, kind of far, But yeah, so in 2019, we basically back to 2019 at the current share price. So, and what actually caused this? So Facebook, Meta platforms. Meta platforms released fourth quarter earnings, and so what they said in their earnings call is they gonna experience headwinds, and they guided what is it? Guided 3 to 11%, I think. Yeah, so they guided we expect first quarter revenue, blah blah blah, which represents 3 to 11% year-over-year growth. And so after that, stock plummeted. I think it went down from where's the price action? So it was I think it was this, yeah. So it went from like 325 or something like that to. Oh wait, let me actually check the. Well, I mean, it doesn't really matter. Oh yeah, there you go. So when it was earnings, so it went from 323 to 200. Wow, wait, is it 246? Yeah, so that's a huge drop. That's like 100 basis points. Anyways, and so looking at their earnings presentations, we can just looking at the revenue, we can see that historically their first quarter has always they always had lower earnings than Q4, and this is actually makes a lot of sense because advertisers usually advertise a lot in Q4, and there's a lot of competition. In Q1 there's not much. Not as much because so, and historically it looks like their Q1 has always been I mean, I'm looking at the nominal value, not the percentage wise, but yeah, it's always been down from Q4 previous year. So all right, let's just go through this earnings presentation, and let's see how rest of the world revenue is increasing, and US and Canada. Yeah, and so worth noticing here that Facebook also they mentioned in their fourth quarter results that they expect where is it? Yeah, so they expect headwinds from macroeconomic challenges, so cost inflation, and basically a lot of companies decreasing their advertising spend, which makes sense. So I mean, they've seen it historically, and also right now, I mean, especially right now because there's like inflation, and it's not transitory as it's not transitory yet, right? Because of the war, Ukraine war, and it's not like even if there's going to be everything okay with Ukraine and Russia and the war stops, it's not like those sanctions, I mean, they might disappear, but there's like, it's going to take a while to go back to like trading, right, with Russia. So yeah, and since the oil prices, but I mean, looking at the US, anyways, I don't want to go in there, but that's because as far as I remember, US. Wait, let me check US. US oil uh, supply by country. I think it's like 1 or 2%. This is America. Oh, 21. Let's find better data, fresh data. So country, yeah, this is good. Yeah, okay. Well, so you can see that the most of the oil is imported from Canada, Mexico, Saudi Arabia. So Russia is, it does represent quite. I mean, I don't know what is percentage wise. Is there percentage wise? But it doesn't look like it represents a huge percentage of oil. It's more, it's probably going to be, Europe is going to be impacted hugely by this, whereas United States, I think, is going to be okay, because right now it's just a lot of fear, a lot of uncertainty, and they're also the inflation. It seems like inflation was caused mainly because of supply chain disruptions, and since that's gonna be solved, hopefully, inflation will decrease. But I'm not macroeconomic expert, so yeah. So something worth mentioning is in the earnings call, they mentioned TikTok about 6 times, and I feel like they're talking about the competition a lot because they just don't want to be scrutinized by government, by what is it, antitrust regulators, and so they don't want to appear as they have a monopoly, even though they have, like, what is it? Let's just go back to the users. Expenses as percentage revenue, effective net income, family daily active users, active daily people a month. Yeah, so they have, that's in billions. So they have okay, so they have 1/3 yeah, so they have 1/3 of world's population on their platform, and most of it, most of it's coming from Western countries. But anyways, so let's just go to the model, because I think that's quite a lot of introduction, and I haven't done really like deep dive, so it's just looking at the numbers, because I think this is very low. It's trading at historical lows. I mean the PE wise, not the share price wise. So it's gonna get, I mean, hopefully it's gonna get here, and then yeah, but we'll see. But I think a lot of it's gonna, the risks that they were talking about advertisers pulling out will probably materialize because of current macroeconomic situation, but that's just I'm not sure. I'm not sure on this. So anyways, let's just go back to the model that we have here, and actually let's just look at the key data, key ratios. So we already looked at the free cash flow. I don't know what happened here. But anyways, it's too far out into in the past. So they've been decreasing their shares. Current ratios look extremely well, but they're getting worse, but that's still very good. So they want to invest, I mean, they're planning to invest. Everybody knows, but unless you probably know that they're investing. I mean, they changed their name and they're investing in Metaverse. And I was actually looking at statistics, some of the polls, which doesn't mean anything, right? So we just, but what is it? There's a, yeah. So 50% of millennials agree that Metaverse would be more fun than real life, and 51% agree that Metaverse would make their lives better. So that's an interesting data point here. Yeah, there's some other, and so it's worth mentioning that gaming, so gaming industry, so let's just do P or virtual. So the global virtual reality market size is projected to reach 26 trillion. Oh, billion, 26 billion by 2027. So it's 19% compounded annual growth rate, which is pretty good, if you ask me. I mean, here it actually says 29, but that's different. Yeah, I mean, let's say, wow, and this one says 31. Yeah, let's just think it's like 19%. That's more believable because it's all projections. So different people have different projections. Anyways, well, looking at this it looks pretty good. Also, although it kind of flattened the growth flattened here. Daily active users, active people, as they say. I like that they instead of users, they refer to their users as people. It sounds very humane. And Facebook is known to have, a lot of antitrust issues, and a lot of Americans and just people around the world really don't like Facebook. So family average revenue per person. Yeah, it's kind of all over the place, but it's oh no, I mean it's okay because it's quarterly, so that's good. That makes sense. Facebook daily active users. Yeah. Okay, so steady growth. Oh, actually here is the decline, right? So it's declining. Where's the decline coming from? Okay, so that's the rest of the world. Well, we're gonna see the decline in the rest of the world. I think Facebook, Russia. Facebook hits Russia blocking. Yeah, so Facebook blocked the platform in Russia. Users. Okay, so it's not completely restricted. Facebook is privileged to live in the country. Anyways, so there might be some issues with this. The rest of the world, so that's Russia or Europe. I don't know where how they include where they put Russia. It's Europe. I mean, it's also in Asia, a little bit in Europe. Anyways, so it's not good to see that. So it seems like they're like flat. They're not really growing their users, but that's they're generating tons of cash flows, and if they find other ways to monetize users, that's gonna significantly that's gonna reflect in their cash flow. So anyways, let's look at the other ratio because I feel like I digressed a lot. So total debt ratio looks good. All these look exceptionally, like extremely well. Operating margins. So yeah, it's kind of all over the place, but since they're gonna invest a lot into Metaverse, it's probably gonna decrease. So we'll have to keep in mind in our assumptions. Okay, so return on invested capital looks just superb. It just wow, and they've done very good job in the last 5 years compared to previous years. It looks like here it wasn't as good. So free cash flow margin, okay. It's probably gonna decrease as well, but in the short term, yeah. Anyways, let's go to our model. And so this model, I'm gonna give credit to Capital Mindset. I just copied the look of it. It uses kind of different approach. It uses terminal multiple approach. But anyways, let's just put 15%, because I mean, based on the even net profit margin, net income margin, it's very good company. It's just, yeah. So we can safely, and it doesn't have a lot of where's the debt? So long-term debt. Oh, they have some debt. I mean, they didn't have any debt. So 12. Yeah, but that's okay. 12. I think that's million. Yeah. So $12 billion and cash. Cash and cash equivalents. Yeah, so they can probably easily. Yeah, I mean, look at how much assets they have, how much cash and short-term investments they have. Anyways, that's it with the. So I haven't really updated anything, but looking at the free cash flow margin in the last 30, the average free cash flow margin in the last 3 years. Actually, let's just do 30% to be. Let's actually say it's gonna be 29%. And then let's just do 0 shares change. This model is kind of not really good at this because I think it's gonna double count the cash flow. So I haven't really updated this. So I'm just gonna leave it as 0. And yeah, I'm just gonna leave these multiples. Well, let's see. I feel like this is very conservative, but I don't know. It also gonna depend on how much growth they have in the future, because the average the active users don't really increase over time. So I'm just gonna keep it as like keep it extremely conservative, and this is like 10 years time period. So I don't know what's gonna happen. But the revenue growth, I feel like they can do well. I just put 3% a low assumption, and in case Metaverse gonna work out, let's do where's their average revenue? 25%, 28%. So I just do 25%, and so I feel like 10% would be good here. 7, 5. So that's the outcome probability. Yeah, okay, that sounds good. This wouldn't be like this. and 19%. Let's give them, and this is just my assumption. I mean, it's just kind of based on historical data, and because actually, let's just give them, yeah, because short term, I think they not gonna do well. So let's do something like this. And so let's say there's very high probability it's gonna be in this range. So from 15 to 5%. Yeah. All right. And so what we have here. So if we want 15% required rate of return, and yeah, and this is like huge range of probabilities. So let's just see what's gonna happen if we want to, how safe this bet is, for example, right now. Because imagine Facebook doesn't grow its revenue at all, and the free cash flow margin is gonna be at the very low side. I mean, we can just do something like this as well. Mm-hmm. 20. So, because I feel like these free cash flow multiples, what's the current multiple? It's like 13. Yeah, so current is 13. So I feel like this is too, but that's in 10 years. Yeah, okay, so let's see. So right now the share price is at $187. So worst case is like very low probability. Let's just not even consider this probability, but okay, let's consider it. So worst case, we're not gonna lose basically any money, but we're not gonna, I mean, we're gonna lose a lot of money to inflation and stuff, but I think this is extremely low probability in here. So if you want 10%, yeah, so market average rate of return, because we can, there is no kind of margin of safety, but margin of safety, I feel like this is already baked in the free cash flow margin and revenue growth, and the multiple. I feel like the market will, but looking at the historical, what's the P ratio meta? So historically, this company Meta, well, has experienced a lot of bad news and a lot of bad sentiment. So it's been always trading. Actually not really. It's been trading quite expensively, I'd say. I mean, for tech company, actually, it was trading very cheaply. So just because of the sentiment, it might change in the future, especially since, I mean, I watched this Lex Fridman, Mark Zuckerberg interview. I recommend you guys to watch it if you're interested in the company. So it seemed to me as Mark Zuckerberg, he actually was pretty humane, kind of. I mean, he was talking about his family, how he likes his family, how he talks with his daughters, or his, I'm not sure if he has daughters or kids, but he has a daughter for sure. So, and he said like how he, I mean, it felt like he's more human. So yeah, this is basically my assumptions. I'd say to conclude this video is just kind of preliminary analysis, so that's why I'm let's just do 20%. Well, let's see how it's gonna play out. So if we want 20%, it's still, and we think that the market will really in 10 years, which is, we'll really think that this company, or just basically based on growth rates in the future, is gonna decline, or is gonna be growing at like 1.5% in 10 years, for example. which I don't think is true, because I mean Facebook is well known for its successful acquisitions, and that's their kind of, as far as I know, that's Metaverse is their first huge bet on something that they're gonna develop in house. And I feel like that's actually, I mean, that's gonna be, I mean, there might be a chance for this to be high. I attribute success, high success probability basically to Metaverse, since Facebook has a lot of users, and they also where is this? So Metaverse. So they're using AI, and so they basically created something to attract other developers. I think they just made it open source or something, just so other developers would like create apps. So I think that's great, because that's always good. Anyways, let's go back to the model. So I feel like Facebook at these levels is pretty good buy. I feel like it can go it cannot go too low. I feel like here at these price levels, I mean, I hope it goes to these levels, and it surely can. So it surely can go to, and it will depend on market sentiment, and especially like the earnings here in April. Probably, I don't know. Well, I mean, they got it to 311% year over year, so it might be like somewhere in this range actually. So it's not going to be something unexpectable. So yeah. So based on these outcomes, I believe that if you believe that Facebook can grow at this 7 to 15% range, which I think it can, or then that's annualized over the next 10 years, it can be a pretty good bet. I mean, because also like the multiples here are very conservative. I'd say for tech company with these kind of metrics and these kind of ratios, it's just being too conservative. Let's just do something like this, because I feel like this is very conservative. But you know, it just kind of, I'm also you know, making it, because you can manipulate numbers in the model and do whatever, and justify any investment, right? So I feel like it would be a very good investment at 157. Under 160 would be a great investment, because then the assumptions basically would be very conservative, and there's going to be a high margin of safety, which everybody loves, margin of safety. Anyways, thank you so much for watching the video. I hope you guys enjoyed. I'm sure I did a lot of well, I need to, if you guys liked it, let me know so I can do a deep dive into the company and its future outlook, and gather a lot of data points, find data points that actually would support my thesis. And there's a lot of, I mean, I developed a checklist which I haven't utilized yet for Meta, so let me know if you want to see that. And thank you. Anyways, hope you yeah, I'm just going in circles here. Yeah, I don't know how to end the video. Anyways, wish you an amazing day, and till next video. Bye bye.